Let's just take a look at the overall sentiment that is occurring right now. We've got US unemployment. We had those FOMC minutes released yesterday. European debt occurring still and creating quite a bit of jitteriness. And then you've also got a lot of prospects for Chinese growth. We are expecting PMI numbers out later on this week. What is your sense of the overall macro environment?
Well, I think we have to face it that America and Europe, the whole European Union, are close to slipping back into recession. If we are looking for growth prospects, we have to look at China, and they're maintaining a pretty robust growth level. Yes, they may have slipped back growth from 10 to 11% to 8 to 9%, but that is still going great guns. And keeping just behind them, there's India and the whole of that Southeast Asian industrialized nodes. And as considering that, that China is South Africa's major single international trading partner, I think there's some positive views to take there for our base commodity exports. As far as the rest is concerned, the world is concerned, we have to concentrate on our strengths, and that Far East is the area of our strength right now.
Well, I mean, just looking at African Rainbow Minerals out with results today, an increase of 93% on the headline earnings per share front, a dividend increased by 125%, and again the company really citing that strong demand from Asia and India and other emerging markets is what's going to put commodities and the company in good stead going forward.
Absolutely, that just confirms what we just said, I think. And what is interesting about African Rainbow Minerals is not only that they're earning a lot more, they're rewarding the shareholders, the 125% increase in the dividend. Of course, they do have a significant cash pile, and maybe that means that there aren't that many brand new growth opportunities for them to go to, and now the patient shareholders are getting their reward. But certainly, I think very good growth prospects looking ahead there.
Ian, aren't you finding it quite fascinating with regards to the cash positions of a lot of these resource companies, and the fact that we're starting to see dividend yields increasing substantially, and apart from that we're also starting to see share buybacks coming to the fore? Would you say that we've actually capitalized as a nation on the high commodity price environment that we're experiencing? And looking at the GDP numbers, mining was down 4% quarter on quarter.
We definitely have not capitalized on it. But that's not exactly the fault of the mining companies themselves. You know, we've had relatively high inflation, we've had wages going way beyond any increase in productivity, and it's awfully difficult to keep up margins under those circumstances. And of course, with the strengthening rand, it's been very difficult to maintain revenue in rand terms. And so, yes, there's been a lot weighing against South African diversified miners, but all that considered, just look at ARM, I think that they're doing reasonably well. And many of the larger companies, take Anglo American for instance, have got very well geographically diversified. So that's where they have been able to keep up with the problems arising here from the stronger domestic currency.
Let's touch on Naspers. The stock up quite significantly in today's session, and again we're seeing its subsidiaries, this time the Russian subsidiary Mail.ru, posting fantastic first half net income, up 115%.
Yes.
It's fantastic numbers that we're seeing coming through. Can we see these kind of numbers maintained, not only for Mail.ru but also Tencent?
Well, I was just going to mention, well, look at Tencent, and it just keeps on going. It just, you know, the potential of China, their economy, the size of their population, and the speed at which they are urbanizing so much of that population says that, well, perhaps they can. And maybe Russia is a similar case in point. And the Russian company has certainly got very strategic interests, like Facebook, for instance, a minority interest, but still a significant one, and in other areas in Russia and the Ukraine, both commodity-based, strong growth areas. So I think that we can look forward to a further strong growth record in Naspers, and well done to the strategic planning of their management.
Yeah, let's just touch on one time out with a trading update. The company says that it sees lower profit. It's talking about a massive increase in the price of petrol, of course that being a very big issue, up 28% or so, and then airport costs up 24%. Do you think this is a good barometer in terms of telling us where the South African consumer and the South African economy is going, or do you think that airlines are just generally a very bad business?
Well, no, I wouldn't say they're a bad business, but it certainly says where the tourism industry is going. And you know, the Minister of Tourism is always saying, all we have to do is get 7 new foreign tourists in and we create 1 job. Hey, but the numbers are decreasing, they're diminishing, they're not growing. Just look at the overcapacity in hotels in the Johannesburg area and other major cities in South Africa. They're closing, certainly the 5-star hotels, and I think that just says the whole travel industry is under a lot of threat. Yes, the economy is, but not to the same extent.
Well, let's also just touch on some news out from BHP Bulletin. The company says that it approved the $367 million for the expansion of the Newcastle coal ports in Australia.
Yeah.
We touched on the commodity space a little earlier. It seems that we're starting to see quite a bit of expansion with regards to the iron ore space. A lot of companies are pumping things back into ensuring that we do see more growth on the ground and the expansion of actual assets. Is that the way to go? Do you think we could be heading into an environment where we could actually see a surplus in some of these commodities?
Well, that's a possibility, but I'm not a believer in doom and gloom and Armageddon for the world economy. I believe the world economy is going to muddle through. You know, I really believe that the central bankers of the world will keep the economies afloat, at least, and I think that they do anything that's necessary to stop them sinking back into a second dip recession. And so, you know, I'm not really completely negative regarding the outlook for these integrated companies. And I think, you know, it's just looking at the size of them. No, I think they're doing the right thing by getting that integrated whole production, movement of goods and delivery all together in one unit.
Let's touch on Rainbow Chicken results out from the company late yesterday, in fact after the closing bell. Fantastic set of numbers. We're seeing revenue increasing by double digits, also dividends of 84 cents per share. The company is concerned about maize and soya prices remaining volatile, but overall the company actually came out with some strong numbers.
Yes, I think they're pretty good. And once again, another integrated approach that they have from the chicken farms themselves, producing the chicken feed, and logistics. You know, delivering them to the end buyer. And I think that really is a very positive move. And perhaps having Remgro as the major shareholder now behind them, that's ensuring they've got capital when they need it for development. And they will see through the tough times that they have had. It has been quite tough with imported chickens at lower prices to contend with. I think the fact they've done this well is a real feather in their cap.
Okay, so let's touch on the construction industry. Murray & Roberts said to come out with results any time now, in fact. What is your view on the construction space right now, Ian? Again, I allude to the GDP numbers out yesterday. We saw 0.5% growth quarter on quarter. A very different picture to what we saw in the mining and manufacturing sectors. Does this mean we can start expecting a higher number, something closer to 1%?
Well, just look at the base they're coming from. You know, the previous quarter, there was 0% change. The quarter before that, that's the fourth quarter of last year, it was 0.2. So really, it's hardly very exciting progress. Yes, they're getting marginally off the ground floor, but I think that it's a very marginal. They're only up to their knees so far. They're not actually standing up. And they've got huge challenges to meet. The government is not involved in any major infrastructural projects now. In fact, they haven't been since the end of the World Cup. And the private sector is looking at excess capacity. There's no need for new infrastructure development from their point of view. So I think it's a harsh area in which to be operating. And on the international side, there's been a similar sort of slowdown. So I think that it's going to be a tough time for them. I wouldn't look for a quick recovery there, really.